What if you could lend money to small businesses and earn returns while supporting local economies? This concept is at the heart of peer-to-peer lending platforms like Funding Circle. But for investors, the question remains, is Funding Circle a buy or sell? Let's dive into the world of this innovative financial company to explore its potential. Funding Circle is a leading online marketplace that connects small and medium-sized enterprises, SMEs, with investors looking for better returns than traditional savings accounts. Founded in 2010, it has grown significantly over the years, expanding its operations across several countries before focusing primarily on the UK market after selling its US business. The business model. Funding Circle's model is straightforward yet powerful. It allows individuals and institutions to lend money directly to SMEs, bypassing traditional banks. This approach benefits both parties. SMEs get access to much-needed capital more efficiently, while lenders can earn higher interest rates compared to conventional savings options. However, like any investment platform, Funding Circle faces challenges such as credit risk, where borrowers might default, and regulatory changes that could impact its operations. Financial performance. In recent years, Funding Circle has shown significant improvements in its financial performance. After reporting a pre-tax loss of £33.2 million in 2023, it expects a positive pre-tax profit for 2024 due to strong second-half results that aligned with management expectations. This turnaround reflects efforts by the company to simplify its business structure and focus on profitability alongside growth. Moreover, Funding Circle aims for medium-term revenue growth of 15% to 20% annually and pre-tax profit margins exceeding 15%. These ambitious targets suggest confidence in their strategy. Growth prospects. Analysts forecast impressive earnings growth for Funding Circle over the next few years, around an annual rate of nearly 88%, with EPS expected to rise by about 84% per annum. While revenue growth is projected at about 9%, which is slower than some high-growth companies, but still outpaces many peers in consumer finance. The return on equity, ROE, is expected to be around 9.1% over 3 years, a relatively modest figure compared to some sectors, but indicative of improving profitability. Market sentiment. Despite these promising forecasts, market sentiment can be volatile. In recent months, shares have experienced fluctuations. They were down slightly during one period, but have shown significant year-on-year gains overall. Analyst consensus suggests a target price around £1.63 per share, a bit above current levels, indicating potential upside if projections hold true. However, past price jumps have sometimes been disconnected from underlying revenue performance, a common phenomenon where investor optimism drives stock prices ahead of actual financial results. Risks and challenges. While there are compelling reasons why investors might consider buying into Funding Circle's vision for supporting SMEs while generating returns. Credit risk. The biggest challenge remains borrower defaults. Regulatory changes. Shifts in regulatory environments could affect lending practices. Market competition. Other fintech platforms may emerge as competitors. These risks highlight why careful consideration is necessary when evaluating whether or not this stock fits your investment strategy. So back to our initial question, is Funding Circle a buy or sell? For those seeking exposure in fintech with potential long-term growth prospects driven by improving profitability and strategic focus on SME lending, buy if you believe strongly in peer-to-peer lending's future. You're willing to take calculated risks associated with credit markets. Sell if regulatory uncertainty concerns you significantly. Short-term volatility makes you uneasy about holding on to stocks during fluctuating periods. Ultimately, investing involves weighing these factors against your personal risk tolerance and investment goals. With that said, thanks for watching.